This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Dan O'Brien, K-State grain economist, and Guy Allen, the senior economist at the IGP Institute, kick off today's show with a domestic and international grain market outlook. They talk about corn and grain sorghum in the first segment. The show and grain market conversation continue with Dan and Guy as they explain what they are seeing in the market for wheat and soybeans. Guy also touches on the U.S. dollar and freight. K-State meteorologist Chip Redmond wraps up the show with his weather forecast that includes the likelihood that Kansas will experience its first severe weather of the month. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you, Shelby.
As we're talking through our different commodities today for the grain market, looking domestically and internationally, starting off with corn, and Dan, domestically, what are we seeing?
Well, coming out of Monday's USDA WASDE report, Monday the 12th, the balance sheet for U.S. corn had, minor adjustments, but the adjustment that was made was important. The old crop ending stocks figure dropped or was lowered to 1.4 billion bushels and change, and that was on the strength of the USDA increasing the export number by 50 million bushels. So basically exports 50 million bushels higher, ending stocks 50 million bushels lower. And I think what's significant about that, when you start looking at historically, when we've ended up with ending stocks that have gotten to 1.4, below 1.2, 1.3, et cetera, those are times the last several years where we've seen higher prices. So the ending stocks from last year, and that's the estimate for what we'll have on August the 31st of this year, then become the September 1 beginning stocks for the next marketing year. And there were no major changes in supply-demand balance sheet. The USDA took the prospective plantings acreage of 95.3 million acres planted as the farmer survey estimate, 87.3 harvested, times 181 bushels an acre, came up with an estimate of 15.82 billion bushels. So by far a record high corn crop. And the surprise, though, to me anyway, is that with that higher production, you're thinking, well, gracious, so we're going to end up with 2 to 2.5 billion bushels of carryout. But instead, what the USDA had done from their earlier points of view, or earlier being at the at that USDA Outlook Forum that they had in February, they sharply raised their feed use up to 5.9 billion bushels. And this year we had 5.75. So they're looking at strong feed use because of cheap grain and ethanol unchanged. Exports, if we just raised this year's exports, the one we're in, to 2.6 billion, they're projecting next year's at 2.675. So they're anticipating large feeding, large exports, steady ethanol, and ending up and projecting ending stocks at 1.8 billion bushels. And like I say, my expectation with that bigger crop is, gracious, we're heading for 2.5 billion. So with that, then the stocks to use figure is at 11.6% stocks to use, and 11.64 to be exact. And then the projected price projected pretty low, down at 420. So 435 this marketing year, 420 the next. Not a lot of change. So in looking at what happens with that projection, so Guy, I'll take this shot, then invite your comment. I think that 181 bushels an acre is a record high, and we've got some dry conditions projected for June, July, August. Chip Redmond, others have talked about that AccuWeather, about the anticipation of some challenges after the next week or so. So I put about a 30% chance that will actually get that record number. We haven't been within a bushel plus of it yet, and we've got more acres spreading the average yield out. So if you look at where we end up with ending stocks to use, and prices, we start shaving that 181 down to say 179, 177, 175, then you're looking at 1.6 billion bushel carry out to 1.5 to 1.4, your rationing usage. Prices get to instead of 420, more like 460, $5, 560. So really, I guess it's in the weatherman's hands again in terms of the domestic U.S. situation. Guy, what are your thoughts on the international side?
Well, I think you're right. The market's really not showing us any weather premium in these current prices at all. But just to point out the market structure, we are looking at a 20-cent little better inverse on the July versus September contract. So there's a pretty good incentive there to get that old crop corn sold. I don't think growers particularly are going to make the same mistake they did last year in carrying too much grain over. And even the July Deeses are the 10-cent inverse. So even if you're a hedger, you're going to have most of that program shipped by the end of July. That said, just in the wake of that, we have seen the basis for corn particularly kick up in the last couple of weeks, even following the USDA report, which we haven't seen the flat price movement upwards that I sort of would have expected, but we have seen some strong reaction in basis, particularly from domestic end users. And that's starting to flow over into the export market there a bit as well. Just note, we are coming out a bit of a high water situation at New Orleans with a bunch of water coming down the Ohio a couple of weeks ago. They did restrict traffic a bit and loading, but that corn export program has remained quite strong. Just coming to your comment on world stocks to use situation, look, we're getting very, very tight when you look at the major exporters, and this is always a concern that we talk about. If we look 3 years ago, ending stocks to use on major exporters was about 11%. Last year, or this current marketing year, by the end of August, we expect to get that down to 4.6. And if you look at USDA numbers for the coming marketing year, 25-26, that's 3.6%. Those are very, very tight numbers. And we're really not seeing any rationing of demand in there at all. Just to look at that export trade complex a bit, I'll start commenting on China. China corn imports are estimated by USDA at 10 million metric tons. The last couple of months, that's unchanged. I thought that's maybe a bit high, but we're experiencing some dry weather in China. Keep in mind, China is the second largest corn producer in the world. So maybe I'm a bit more optimistic that we'll achieve that 10 million metric tons. It's also good to see we seem to have a bit of a breakthrough in the trade negotiations with China last week. And I'm optimistic in the next few weeks we're going to see a number of these trade deals come to the table, and we'll see how China fits in there. I'm actually in China the week after next, and I'll get to have some conversations with some traders on the ground. Just looking at some other major exporters there, Argentina's production is coming in at about 53 million metric tons. Brazil, 131. That's up a million metric tons from last year. Russia's up a million metric tons, coming in at 16. South Africa, they've been experiencing dry weather down there. As we've been talking, their harvest is coming in at the moment, 16 and a half. Ukraine is up significantly at 30.5 million metric tons. That's up 3.7 million metric tons. So, it's sort of interesting to look at that production scenario. So I think everybody's feeling pretty comfortable at the moment. But, look, I'm quite optimistic we're going to see these prices continue to move higher in corn.
And it's mainly a weather risk situation.
Yes.
And even those numbers that we talked about for the next marketing year, those are still on the come. They're estimated out there. So a lot of risk and uncertainty to be dealt with.
And moving on to our next commodity, what are we seeing for grain sorghum?
USDA came up with their balance sheet for grain sorghum, and whereas this year exports have fallen off sharply, they must be planning on the U.S. and China reconciling in terms of these trade disagreements. So they came back in, Guy, and projected 250 million bushels of exports again. This year, we're probably going to have trouble making 100. So anyway, there you go. And any comments on that just real quick?
Just on the sorghum, look, they left exports unchanged. We saw Argentina and Australia have reasonable sized sorghum crops this year. That's mainly what's moving through the export supply chains at the moment. I think we get to July. If we get some of these trade issues worked out with China, we should see see that sorghum basis come back. At the moment, with the cheap basis we've had here, it's pricing itself into the feed grain rations pretty aggressively, not only in the U.S., but we've seen good sorghum exports into Mexico there as well.
So outlook for next year with U.S. and China apparently moving towards reconciliation on trade issues, a lot more positive. And that's basically what the USDA is saying. Hey, we're going to go back to a normal year next year. And that'll make a big difference in Kansas for grain sorghum.
Do you think we'll see changes with the grain sorghum market as we think about planting it?
Right now, and even at the most recent report that's come out, we haven't seen, we're just trickling along with grain sorghum exports. We still have a really weak basis. We're still waiting for the promise of what's coming in the future. I don't see a lot of support in the short run for sorghum until we start to see movement and the basis starts to come closer to corn and people have more trust in how that grain sorghum export picture is going to work out.
Yeah, with planting progress moving forward, fairly good and reasonable moisture profiles in a lot of places, I think a lot of growers will tend to plant more corn. Soybeans still above $10, so maybe some of that later planting stays in beans. It's just with that lower basis that we're seeing on sorghum. It's just there's not a big incentive there to plant a lot.
But the promise is to turn this thing around. You know, don't want to be down on that crop. It's a great crop. It has a great place out in our part of the world. But it does seem like that if the exports come back, then sorghum sort of disengages from corn a bit, has its own market, and then you change attitudes and you see acreage stand up all that much more.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Dan and Guy as we continue our conversation. You're tuned back into Agriculture Today, and we continue our show and conversation with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, as we continue talking about the grain market, what are we seeing internationally for wheat, Guy?
Well, we're expecting to see a record wheat production this coming year in 25-26. And if you look at the USDA numbers at 808.5 million metric tons, that's up 1% from a year ago. And that's what's really sort of hanging over this market. Wheat prices have been quite disappointing here. Just to run through some of the major exporters and producers, Russia's production is forecast at 83 million metric tons. That's up 3% from last year. Exports projected at 45 million. That's up 1.5 million. Ukraine production at 23 million metric tons. That's down 2% from last year. Exports expected at 16.5, just up 500,000 from last year. Significant increase. The big mover in there is probably the European Union at 136 million metric tons compared to 122 last year, with exports at 34 million. And keep in mind, the EU puts a lot of that wheat into that North Africa, Middle East market and competes pretty head-to-head with the U.S. Canadian production at 36 million compared to 35 last year. Exports unchanged. Australians at 31 million metric tons compared to 34 last year. They've had some dry weather, particularly in the southeast of the country. Exports down 2 million metric tons to 23 from 25. The Argentine crop, it's up about 1.5 million at 20 versus 18.5 last year. But exports are expected to be up 2 million metric tons to 13 versus 11 last year. Now, the world's biggest wheat producer, India, they're forecast at 117 million metric tons, which is up 3% from last year. But their exports are basically just 250,000 metric tons, bugger all. Food supply is a big issue there, and they want to keep that commodity in country, and they're concerned about that. The big unknown and wild card in wheat is China again. USDA has that number at 6 million metric tons compared to 3.3 last year. I think we might struggle to achieve that number, but that's what the USDA has plugged in. Little dry weather in China may push that a bit. The key thing is, look, with Wheat ending stocks at 25%. For major exporters, we were looking at 3.6% for corn. Wheat at 25%. It's pretty darn comfortable. And we're starting to see wheat in a number of places around the world pricing itself into the feed ration as it would. So, look, as I've sort of mentioned before, corn's going to be the leader on any movement in wheat prices. And wheat, I think, is going to struggle to move higher.
Yeah, I saw news reports out of China that they were that the government was sending out information to the farm level to try to come up with whatever mitigating practices they could to try to save wheat in the field. So there's an issue there. Would they come to the U.S. or they go to the general market? They'd go wherever they had to, unless there's a trade, what they call TRQ, a trade required quantity. So we'll see how that works. On the domestic,
they'd probably go, just because of the freight situation. They'd probably go to our neighbors down in Australia just because of the freight rates. That said, freight rates are fairly cheap right now, so we're not at a huge transportation disadvantage on that.
Yeah, quickly on the domestic side, the USDA projected lower exports for the next marketing year, 820 million bushels this year, 800 next year, along with that yield estimate of 51.6 bushels per acre, which the Kansas Wheat Tour seems to be talking about as well for hard red here of late. At least that in early days, that's what they were doing. End up with a stocks to use figure of 47%. So when you get that high, it means for every 100 bushels that you use, you have 47 of them sitting someplace in a bin. So that's rough. And for hard red winter, when we come here to May 31st, they're projecting ending stocks of 401 million, but basically that's a 62% stocks to use. So man, for every 100 bushels of hard red that we use, we've got 62 sitting in a bin someplace. So kind of an overburdening supply situation working against us.
What are we seeing for soybeans?
And I'll take a shot at that on the domestic side. Big issue with the soybean balance sheet is that in the prospective plantings report, we lowered projected acres down to by about 3 million, 2.5 to 3. So 83.5 million acres of soybeans. Take that times record high yield also for beans, 52.5 bushels per acre, and run that through a balance sheet. So you end up with something that's actually moderately tight, 295 million bushels. And that's driven mainly by lower acres, I think. And of course, in my own thinking, you look at that and you come back and see at that 52.5, if we have dry weather, especially for soybeans in in July and August, then you can rightfully ask the question, what happens if we get, instead of 52.5, get 51 or 49.5 or something? Well, you do end up and you get stocks closer to 190 to 250 million bushels and prices in that, historically, in that type of situation, closer to, instead of 1025, more like 1150 or 1250. So again, for soybeans as well as for corn and these other crops, again, what happens this summer and then the heart of the growing season, June, July, August, is gonna tell the tale on where we go on these crops domestically.
Guy, what are we seeing internationally?
Well, internationally, hard to paint a too optimistic picture. I just, going down to the bottom line, looking at ending stocks for soybeans, we're unchanged to slightly higher on this coming marketing year versus our current marketing year at 25%. Plenty of soybeans out there. Just to sort of highlight, Brazil is expected to carry in a record 33 million metric tons of soybeans this fall to the start of our marketing year in September. That's 3.6 million more than last year. That's going to compete against our new crop soybeans. So it's going to be a slow shift in logistics from the southern hemisphere to back to North America and the U.S. So it's going to be a challenge with that big carryout. So just looking at the other big swing on the imports, looking at China, USDA has their crush usage up 4 million metric tons to a record 112 million metric tons of crush, which is quite optimistic. But I think, hog numbers are recovering and very much possible there. So imports from China, particularly if we get that trade relationship worked out, could be a little more optimistic. But I think it's going to be coming a little later in the marketing year next year, not up front and early on that.
And if I can add in on that, Guy, for soybean oil, we just keep chugging along at amazing levels of exports. Do you have any comment on that? I think the impetus that comes coming out of Asia, isn't it? Largely.
Yeah. The export has been very optimistic for soybean oil. Just in the last few days, there was a biofuel renewable diesel issue that came out, which sort of weighed on that soybean oil market pretty heavy. I don't recall the exact details of that, but that as we get changing regulatory requirements on that biofuel situation, that's going to have a big potential impact and swing on not only soybean oil, but also ethanol and corn prices there as well.
Guy, what are we seeing for the U.S. dollar?
Yeah, just looking at the U.S. dollar, we've seen a bit of strength in the dollar situation in the last few days or over the last month. We're back up above 100. We approached 102 a couple weeks ago. Now it's at about 100.8 on the index. The good thing is we're seeing some of our customer currencies see a bit of strength in their values there as well. And that's probably the most important thing, is that they're seeing value with the strength in their currency against the U.S. dollar. So they're more likely to buy a bit more commodities. Just looking at transportation, I touched base on that earlier. We are seeing a bit of nearby weakness in the dry bulk index. We're at historically fairly low levels on that. If we start seeing some export sales, particularly to China, the first thing I think we'll see that in is probably in the freight market. We'll see that indication probably quicker than what we'll see it in the underlying commodity market. So I'll continue to keep a good eye on that, but being a bit more optimistic in the whole trade relationship, particularly if they get some of these tariff issues settled down, it'll help bring those freight costs back up a bit. And that's not a bad thing for commodities. That means we're moving dry bulk goods.
Dan, Guy, I appreciate both taking the time to join us today.
Thank you, Shelby. Take care.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now on Agriculture Today, but when we come back, we'll be joined by K-State meteorologist Chip Redmond with this week's weather update. You're tuned in to Agriculture Today, and we conclude our Friday show with the weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Thanks for having me.
Chip, warm and dry weather this past weekend. Has everyone in Kansas seen that?
Yeah, everyone has seen it. In fact, the most recent time we've seen at least a quarter inch of rain in the state was 8 days ago, and some places, I think like Sheridan County, have gone over 70 days without seeing a quarter inch of rain. And I'd be remiss if I didn't mention the far, far, far northwest did receive 1/10 of an inch of rain Wednesday night. There was some pretty impressive wind associated with a line of thunderstorms that fell apart. As soon as it hit Kansas, we measured up to 85 miles an hour in Udell, and then multiple reports of 60, even 70 miles an hour further south and west from there. Other than that, it's been sunny, occasional high clouds, and breezy and above normal temperatures. We've seen temperatures running 10 to 15 degrees above normal for the high temperatures. Lows, not quite as warm, but still running about 5 to 10 degrees above average. Month to date, we were below average temperature-wise. We just started the month off cool. Definitely reversed that in the last week with these warm, dry, and windy conditions.
Are we going to continue to see those conditions?
If you look at the forecast, Saturday looks to be like the last day where we won't have any precipitation across the state. We'll actually have a little bit lighter winds on Saturday, which is good. Vegetation's growing rapidly right now, and combined with these above normal temperatures and breezy winds, we're extracting moisture out of the soil at an impressive rate. And unfortunately, when we look at the soil surplus, and at least soil moisture we had going into this period, a lot of it was holdover from November when we had this heavy rain. So now we're starting to offset that. That's starting to be used up, and we're in that point where we need to keep moisture coming. So a big storm system is going to approach from the west starting on Sunday. That's going to allow for a couple lines of storms and isolated showers to move across the state overnight into Sunday, then another round on Sunday night, and then that low gets much closer as we get into Monday and Tuesday, and we start to look at higher impacts from that storm system with increased wind shear, a lot of cold air aloft, and a developing low that's going to be probably somewhere in northern Kansas, southern Nebraska. It's going to extend the dry line through the state down into Oklahoma. And that's maybe the line of where active weather is going to continue, that dry line into the east on Monday, Tuesday, and Wednesday. And we're going to have multiple rounds of severe weather possible along that dry line into the east. And we're talking all forms of severe weather, tornadoes, wind, hail, weather we haven't really seen a whole lot of. In fact, there's been no severe thunderstorm warnings in the entire state of Kansas until we recorded this in May thus far. That's impressive for our peak severe weather month. But that's going to change next week with lots of severe. Unfortunately, a lot of it's going to be weighted towards the central and eastern part of the state. Hopefully, we can slow that system down. We can drag that dry line further west and have a much bigger window of precipitation.
Are we going to continue to see precipitation throughout the week, or will it be getting cut off on Wednesday?
Once that system moves through by middle of next week, there's a little bit of uncertainty of how much moisture is going to linger in its wake. A lot of people are concerned about Memorial Day weekend, and I'm watching the heat wave right now that is in southern Texas, and it's slowly moving west. This is associated with a dome of high pressure that's developed in southern Texas. They've had 100-degree heat already. Over the course of the next week, and as this storm system moves through, that high pressure is going to slip in behind it and move north and westward into the western United States. And a pretty impactful heat wave is going to occur in the southwest and parts of California. And it does appear that as the system moves out, some of that heat's going to try to probably push into the central plains eastward by the end of the month. I'm not so sure it's going to make it here in time by the Memorial Day weekend. I think it'll be just after the Memorial Day weekend. I think Memorial Day weekend, we'll still have a couple chances of showers and storms with that lingering moisture, but cooler, being not like 10 to 15 degrees above normal, but more like 4 to 5 degrees above normal. But then as we get into June, it definitely looks like we open up that opportunity for maybe our first real heat wave of the year. Some folks still haven't hit 90 degrees yet this year, especially eastern Kansas. So that'll be the next weather event, and that could potentially aid in more drying, more breezy conditions at a time where we need more moisture to keep coming. And unfortunately, it looks like we might be talking about drought more often than not as we go into June.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.